Welcome to the 40 Finance channel, everybody. Today we are talking about Taiwan Semiconductor, TSMC. This is definitely one of the most important companies in the entire world as they produce the chips for several of the big tech firms, including Apple, Amazon, Google, NVDA. So at a core, if you're a manufacturing company who has a client list like that, things are probably going pretty good. The one catch or knock on this stock for many, many years now is that it is the Taiwan Semiconductor Manufacturing Company. So it is based in Taiwan. And obviously, our relations with China has always been a topic of conversation. And now with Trump coming back into office, historically, he's had the bumpiest road, if you will, with China. So TSMC is back in the spotlight. They are doing wonderful things on the business front, but you're starting to hear more and more chatter like this. So this article on Seeking Alpha, I'll go through the highlights. Time to dump shares in TSMC. And quick promo before we jump in, if you're interested in learning more about Seeking Alpha Premium. That's the stock platform that I use on my channel all the time. Check out the description for my affiliate link. Gets you $30 off your first year, as well as a 7-day free trial so you can test everything out before you actually pay. All right, so let's get into the bear thesis. If you're not familiar with TSMC, frankly, it's been the same bear thesis for quite a while now. I used to own the stock and I did sell out during COVID times for other reasons at the time. But generally speaking, I am positive on TSMC, at least from a business standpoint. So I'm going to walk you through both sides of the coin and just leave you with the thought at the end, as well as my price prediction. Right now with the rise, this is the opinion of bears of Wall Street. So obviously with a profile like this, you can imagine what side of the coin he or she falls on. With the rise of geopolitical risk, TMC's future looks more uncertain than ever. 2025 could be different for TSMC than 2024 when it comes to performance, and its shares may not offer the same growth anymore. Our model says that TSMC shares are overvalued, which is why we rate the company as a sell. And outside of valuation, the big bear thesis here gets back to location. Biggest downside of TSMC is location. Back in July, when Donald Trump accused Taiwan of stealing the American chip business, the shares of TSMC experienced an 8% pullback in a short period. With Trump coming back into the Oval Office, political risks might only increase in the foreseeable future. It goes on to talk about how Donald Trump might reevaluate the CHIPS Act, and at the same time, expected escalation of the Sino-American trade could create additional hurdles for TSMC to increase its sales. All right, so those are the geopolitical risks if you were not familiar. Next up, this is what I would say generally bullish article. Analyst has a buy on the stock here, published right before Christmas. TSMC is poised for 25% revenue growth driven by robust AI demand, N2 chip debut, and overseas fab production ramp. Debut of N2 featuring GAA advanced nanosheet transistors will significantly enhance performance. TSMC's market share and pricing power will increase with a 10 to 20% price hike for N2 and N3 wafers. And then finally, despite potential smartphone and PC market weakness, strong demand from AI accelerators and ASICs will support TSMC's revenue and margin growth. So this bull case focuses around, the emerging technology that TSMC has always been at the forefront of, the demand for that technology, and then price hikes. And they historically always do price hikes. They communicate this with their partners in advance, and they typically share those price hikes coming up on one of their conference calls. Okay, let's talk about TSMC's valuation for a second. That was part of the previous bear case as well. PE gap forward is currently about 29. Share price today, by the way, is 207.41. It's about 29 on the forward gap PE. 5-year average is 22. So they are above that, give or take 30%. If we go down to price to sales, looking forward, just under 10. Oddly, the 5-year average for some reason is 53. That to me doesn't sound right. But either way, you're sneaking in around 10 here today. Next, let's take a look at the estimates going forward. So like so many stocks, we are here in January. Their fiscal year just ended, December 2024. Okay, we don't know how that ended until they do their earnings call, I assume late January into February at some time. But the target, if you will, is $7.03. That would be a 35% year over year growth on EPS. So real strong growth for a company this large on the bottom line. December of 2025, or basically fiscal year for this year, the projection right now is 893. That would be an additional 27% growth on the bottom line. The thing is about this number, as I say all the time in my videos here in January, we are only, 45, 60 days away from this being the actual fundamental PE number that everybody's going to focus on. So if you look at 893 as your forward PE, that brings you to 2257. If you remember back on that 5-year average, that's right what the 5-year average was. Okay. And so while this is one fiscal year ahead, we're merely days away from this being the foundational element for the forward PE going forward. All right. What about revenue? 2024 is expected to land at about $88 billion. That's 28% growth year over year. What about next year? 110 billion, 25% growth. If we look at the two, price to sales, and we think about everything I just said about entering this fiscal year and what the focus is going to be, we didn't get a good 5-year average on the last screen, but current price to sales, 967, that will quickly shift to 7.7 looking ahead. Okay, so those are the current projections, but if you don't follow TSM, I got to tell you, one of the things they always do historically is outperform even their own projections. Now, that's a slippery slope. That could change at any time, but I wanted to show you something here. We'll use the table view. This is for EPS, okay? Actual versus consensus. The blue line is actual. You get the feel that they nudge above actual almost every time. And if you go in the table view, which goes back to December of 2020, you've never not had a positive surprise on the EPS line. So with that in mind, if we go back and think about December of 2025, I'm going to use 895. I'm going to give them 2 whole pennies. Seems like it would probably be safe to do a 9, but for the sake of argument, I'm going to say 895. And as far as the multiples concerned, I'm just going to bump it up to 23. So I'll just say, depending on who's looking at what and when, we'll give them about a 5-year average of 23 on the forward PE. Now, if you took that into account, it puts you at about $206 or so. So right now, TSM, at least on conservative projections, is fairly valued. There is not a lot of fat here, but there are a couple things that will change even beyond their technology that they continue to add to. They should announce their price hikes in a more formatted way coming sometime in Q1. So that will change how the projected EPS runs as well as revenues. And with that, it wouldn't surprise me if, a price target that I might make 4 or 5 months from now, if I said 206, it wouldn't surprise me if that goes to 215, 220 as the year progresses and they outperform as they have in the past. I guess the one thing I would say about today at 207, if you don't own TSM, you may want to wait for a red day on the market. See, can you get it closer to 190 at some point? Maybe when Trump comes in office, he says something about China and everything goes crazy. Now, lastly, as far as this geopolitical risk is concerned, I've kind of come to a resolution for myself with TSMC. And this particular comment at least sums up the companies that they do business with. We mentioned NVIDIA, AMD, Qualcomm, Broadcom, Marvell, Apple, Amazon, Google. And with this lineup of clients, I've sort of come to the realization that does the geopolitical risk even matter? Okay, because if something happens to TSMC, if something happens between USA and China that escalates, beyond the level of just chatter, we're all screwed anyway. Okay, the whole tech market, QQQ, all of these companies are just screwed anyway. There's no way around it. So if you're sitting on the fence as time goes on, I'm not saying buy this one today. I just told you it was fairly valued. But if you're on the fence solely because you think that China will invade Taiwan, then you might as well not be in the stock market anyway. I mean, unless you just have a portfolio of oil stocks and canned goods, you might as well not be in the stock market anyway, because Google, Apple, NVIDIA, they're all going to get, destroyed as soon as TSM has problems. That's going to lead to problems in the tech market. So I do want to end on that point when it comes to the bears with TSMC, the bears who are focused on geopolitical, just not sure that it matters anyway. But I personally would not let that hold you back from investing in this company. If you find a good entry point, if your own research says there's not much comparable in terms of opportunity, just don't have it be the number one holding in your portfolio. But the typical rule of five, the 5% investment in a single stock, I don't think you can listen too much to geopolitical concerns, not because they don't exist, but because of what would happen globally if the bad news actually did come. All right, guys, let me know what you think of TSMC in the comments. Do you have a better buy that is a chip foundry that you would actually recommend? And before you go, don't forget to check out that special offer for Seeking Alpha Premium down below. I hope everybody's doing well. We'll see you on the next video.